Hey, good evening, everyone. Welcome to Urban Economic Empowerment Show. And this evening, we're going to talk about business. We're going to talk about, in particularly, we're going to talk about why are people afraid to file taxes? All right, okay. It's something that's not going away. It has been around forever and a day. Okay, at least as long as I've been living, and it gets worse as time go by. Look like they want a little bit more and more every time they open their eyes. All right. So I want to shout out all of you who possibly will come in and watch as I get myself together. I didn't got myself in the location. I needed some more light, so I didn't position myself. I didn't got away from my desk. I'm doing my own little thing, child. I'm about to make this happen. Okay, so give me one little second. So peace, power, and profit to all of you all. Sorry, I don't have any theme music or anything like that. So hopefully I can get my game up. Somebody want to teach me? Why is people calling my phone and messing me up? I don't know. All right. So let's get into it. I'm gonna you may want to get your paper and pen out in a second. So first I want to start off with the fact that, hey, welcome to Urban Economic Empowerment Show. It's been a minute because this time of the year it's tax season, and so I'm usually caught up with helping individuals do their taxes if I'm not doing my own, making sure I'm staying on point and everything is rocking and rolling as it should. Oh, hold on. Gotta make sure I get connected to the internet, right? So I'm gonna take my time with this one, and I need to update some things. Where am I on that? Hold on. Kicked off the net. I kicked off the internet for a hot minute. Why does it say that? Who done came and messed with? You know what? Who done came? You know what? You cannot leave your laptop down, honey, because if you leave your laptop down, when you look again, not only will you not, your laptop will be off, the internet is off. My nephew, he probably played a game or something, doing his own little thing, just messing me up. And I guess I did not expect to come in here and don't see the internet. What's going on? What? All right, I have to do it the hard way. This is crazy. Okay, let me figure this out, y'all. What's really going on? Why is my Wi-Fi not showing? Ain't this something? This is crazy. I'm waiting. What? Always something. Let me make sure I'm on the internet on here. Because if not, well, I have to be on the internet because I'm actually sharing my screen. Okay, cool. All right, so let me rock and roll with what I have because I have a problem going on over here. Mhm. All right, so let's do this. Let me see if I can get it over here. So I'm gonna share a few things, and hopefully you all if you all are if you're in business, or you're a sole proprietor, you're a freelancer, maybe you can gain some insight from this information. Let's see. All right, so let's see. All right, so here we go. I'm not happy about this. All right, so here's the slogan. Y'all already know back in 2017, we used to say, get you a team in 2017. And that just goes to show you how long we have been dealing with the Urban Economic Empowerment Show, educating individuals on business compliance. I would like to say the administrative, more of the administrative side to it, business. Because if you don't have your paperwork together, if your record keeping is all out of whack, it will make or break you. And usually that's how it goes. Either you are afraid to file taxes because you don't have your records in order, and you know that if you were audited, that you wouldn't be able to justify your expenditures. The only reason usually sometimes they worry about your income if you got like massive dollars or whatever, but it's usually what you're writing off, where those deductions are coming from. And so record keeping becomes plays a big part of that. Or you're not filing because it's just a lack of knowledge, like anything that we are a part of. And so many of these different areas of responsibilities that I deal with, I always make sure that the very first thing is that the person has an accounting system. And so in my econ, we have a very simple accounting system called the cash flow manager, which allows you to track your income and expenses, right? Very simple, who, what, when, why, where, upload your receipt, track your mileage, all of those different categories that are um, that you're responsible for if you were to be audited. So many of you, some of you may have corporations, some may have limited liabilities, some of you may be a single disregarded entity, maybe an LLC, you start to move up in the game and you expanded and now you're filing as an S corp, right? Um, or you are still following the Schedule C as a sole proprietor. At any rate, you need to make sure that you have your record keeping together and that you are keeping track of your income, expenses, and your mileage. And so these are some of the administrative areas that you usually make sure that you have in order when you are getting into business, right? Everybody knows about the EIN with the IRS. It's that 9-digit code, or was it 7 to 8 digit code that you get from the IRS that you use to identify your tax filings, making the IRS making sure that whatever you made, that they got a piece of, right? Then you have your articles of incorporation or articles of formation, or in some states it may be articles of organization. And that is where you let the state know, hey, I want to do business in your state. Okay, I have an office, whether it's a home office space or a brick and mortar. Those documents gives you the key to do business in that state. And if you've taken over a business, maybe it's being passed down to you, maybe you purchased somebody else's business, then you have to make sure that not only that you keep your amended articles of that company, but you have to have the originals as well. So from its first inception down to any amendments that is involved. The DUNS number, I still say make sure that you can obtain a DUNS number, because depending on what depending on the business venture that you get involved with, they may ask for it. And all a DUNS number is where you can find your credit, where you can find your business credit report. It lets you, give just like with a personal credit report, you got those three. credit bureaus that you go and you look to see what your scores are, your standings. Well, the Duns has a credit location for businesses, and it's the same thing, right? And then you have Sam's. Well, Sam's has gotten really savvy, you guys. Can't just do your own thing with Sam's now. You have to make sure that the IRS name, address, and the person responsible, as well as the articles of incorporation for that state, right? All of that is lined up, it agrees, and it matches. If not, you will get a hard stop in SAMS. They may issue you the UEI, which is the unique entity identifier. However, you may not get the cage code, which is the ultimate 5-digit number or code or 5 digits that allows you to do business with the government. All right. And so SAMS is just simply a vehicle in which all of your administrative information, everything about you, who you are, how much you make, and then it tells you all the do's and the don'ts in the FAR regulation, the Federal Acquisition Regulation, that deals with purchases, disbursements, all the how to's and everything. And that's all in SAMS. And they expect you to understand it and know it. And at some point, make sure that you have gone through it to understand it. So that's it. That's on the for-profit side. And then, of course, you have your nonprofit, and the only difference between the two is one is taxable and one is not, right? Still responsible for the same type of administrative information, along with um, it's governed by a board. So you don't own nonprofits. Stop going around saying I own a nonprofit. It's governed by a board. You may be the founder. You may have added in your bylaws that you shouldn't be removed, but you're not the owner. Okay. Same thing. In addition, at the Secretary of State, you usually have to file your charitable registration, and that's just letting them know that you're raising money in their state and how much you're raising, even if you're doing any raffles. Then you have the bylaws, which states how your organization is ran. So just like an operations agreement on the for-profit side tells how that business is operated, who the interest parties are, what should happen to it if it's dissolved, if you're a partnership, if you split. That's how the bylaws give those do's and don'ts and those how to's. So for those individuals who are interested in this is just a little screenshot. I'm going to come back to that in a few. Let me get into some of the tax info. So that's a handout we used to use in reference to taxes, and it'll say the common tax deductions, right? And this is just a few. So this is probably the most simple, the seven that you kind of use the most. If you are one owner and you're doing business, more likely you have a vehicle of some sort. Um, Maybe you own a home and you have the interest piece of it. Maybe you don't. You have a cell phone or some type of way of communicating. You have your and the internet would fall under those communications. And then you have meals and entertainment because you're probably doing business lunches or dinners or going to conferences, anything that has to do with business. Then you travel. Your wages, you may be paying someone, maybe not. And the depreciation, which kind of usually falls under the whole vehicle deal, or maybe some equipment that you may have. These are some of the tax items that you are responsible for. And I'll pull up the Schedule C. So let's get the current rates because this is old. I'm going to come back to that. So let me go to the internet. Uh-oh. And I want to pull up the latest mileage rate for 2024. So if you were filing your taxes for 2023, right? Latest mileage, let's look at the rates. Ooh, I didn't want to come here. I wanted to go to the IRS site. When they say source up, I gotta make sure I'm giving you guys straight from the federal sites, okay? I usually don't use other sites unless I'm just reading the article and I'm just wanting to get feedback on the article. So, the IRS issues a standard mileage rates for 2024. Mileage rate increased to 67 cents a mile, up 1.5 cents from 2023. We always say follow the money. You want to know what things we ain't have yet and how it actually works for you? Follow the money. What's up, Mika? So here's the IRS notification for December 14, 2023. It says the Internal Revenue Service today issued the 2024 optional standard mileage rates used to calculate the deductible cost of operating an automobile for business, charitable, medical, or moving purposes. Beginning on January 1st, 2024, the standard mileage rates for the use of a car, also vans, pickups, or panel trucks, will be 67 cents per mile driven for businesses used up to which is up 1.5 cents in 2023, 21 cents per mile driven for medical or moving purposes for qualified active duty members of the armed forces, a decrease of 1 cent in 2023. They get their money from somewhere, right? 14 cents per mile driven in service of charitable organization. The rate is set by statute and remains unchanged from 2023. Okay. These rates apply to electrical and hybrid electrical automobiles as well as gasoline and diesel powered vehicles. The standard mileage rate for business used is based on an annual study of fixed and variable cost of operating an automobile. The rate for medical and moving purposes is based on the variable cost. It is important to note that under the Tax Cuts and Jobs Act, taxpayers cannot claim a miscellaneous itemized deduction for unreimbursed employee travel expenses. Taxpayers also cannot claim a deduction for moving expenses unless they are members of the armed forces on active duty moving under orders to a permanent change of stations. All right, so you can't claim moving expenses unless you are on active duty military. All right. Taxpayers always have the option of calculating the actual cost of using their vehicle rather than using the standard mileage rates. Taxpayers can use a standard mileage rate, but generally must opt to use it in the first year the car is available for business use. Then, in later years, they can choose to either the standard rate or actual expenses. Leased vehicles must use the standard mileage rate method for the entire lease period, including renewals if the standard mileage rate is chosen. All right. So let me give you that again. This piece. Taxpayers can use the standard mileage rate, but generally must opt out to use it in the first year the car is available for business use. Then, in later years, they can choose either standard mileage rate or actual expense. So, if you bought your car for the first time, using it for business, then you can use standard. But after the second year and beyond, you can choose standard or actual expense. I probably should have did actual this year because I had a lot of expenses for the vehicle. Let's keep it going. And we're talking about mileage rates. It says This notice contains an optional 2024 standard mileage rates, as well as a maximum automobile cost used to calculate the allowance under the fixed and variable plan. In addition, the notice provides the maximum fair market value of an employer provided automobiles first made available to employees for personal use in the calendar year 2024, for which the employers may use the fleet average valuation rule in or the vehicle's cents per mile valuation rule. All right, so that's for those of you who have company cars. Okay, so you could see the mileage rate has actually changed over the years. So let's do let's say uh compare mileage rates. And let's see what they used to be and what they are now. We can do it. No. Let's see if it gives us multiple years. That's 2023. Here we go, right here. All right, so you can see that over the years, the mileage rate has varied. Okay, so I like this chart. So you can see over the years, it has really changed a lot. So from 15 until now, it's actually gone up 10 cents or 9.5 cents, right? From 2015 to 2024. Okay. So you decide, right? So company car, of course, would be in the company's name. However, if you're using your personal vehicle, as I read earlier, for business use, then you can account for that mileage. So either or. All right. So I absolutely love the fact that you get 67 cents per mile. It helps out a lot when it comes down to you doing your taxes and getting those tax deductions. So now you may want to ask, okay, Monica, I understand that I can get, I can deduct the mileage, but how do I do so? So I have, let me stop sharing for a second. Or I actually could share and then just pause the screen. Oh, I can use it right here. Let's see. Oh, okay, here we go. Let's see if you all can see this little diagram. And this comes straight from the regulation. Let's see if I can move it where you can see it. See the whole thing. All right, so let me see what it looks like on my phone. Okay, so if you see this diagram, it actually says you have your home location here, and then you have your main location. So from home to your main job, right? So here's the rules. If you're going from your home to a temporary work location, let's say you're going to meet somebody at Starbucks and have a business meeting, right? That would be a temporary work location. It says deductible if you have a regular job or a main job at another location. If you have it, or maybe you have a little side job, maybe you have two jobs. So whichever one is the main one, basically bringing home the most money, that one to and from home, you cannot deduct. But if you go to a second job in between, you can deduct that. Or if you have a business meeting, you can deduct that, right? From that temporary work location to your main job, you can deduct that, right? From your main job back home, never deduct. You can't deduct, which means you cannot count those miles. From your main job to a second job or another location, you can deduct that. Though you can count those miles, but from if you're coming from that second job to home, you cannot deduct. All right. So the way to think about that is I wouldn't even try, don't even try to calculate any miles going anywhere where you have to work. If it's a work location, you get a W 2 because they're going to say, oh, that's your main job. That doesn't count as business miles, right? Only deduct those areas that are not. So it says home, the place where you reside. Transportation expenses between your home and your main or regular place of work are personal commutal expenses. So you put that on your personal side. Regular or main job, your principal place of business. If you have more than one job, you must determine which one is your regular or your main job. Consider the time you spend at each, the activity you have at each, and the income you earned at each. Temporary work location, the place where your work assignment is realistically expected to last and does in fact last 1 year or less. Unless you have a regular place of business, you can only deduct your transportation expenses to a temporary work location outside of the metropolitan area. Second job. If you have a regular work or two or more places in one day, whether or not for the same employer, you can deduct your transportation expenses of getting from one workplace to another. If you don't go directly from your first job to your second job to to your second job, oh, to your second job, you can only deduct the transportation expenses of only going directly from your first job to your second job. You can't deduct your transportation expenses between your home and a second job on a day off from the main job. Right? Let's see. What about startup costs? The capital you put in to build a business and and haven't made income yet, is that deductible? I ain't get that for you. I'm talking about mileage. So when you go in to do your, let's do this since you brought that up. All right. So we're gonna hold on. So it's like loaning your business money. Let's do the sole proprietor first. We're gonna go to the Schedule C. Let's pull it out. Let's see. I wanted to. Hey, I'm super excited that TurboTax you can file business taxes now. Oh, honey, you know how much money that's gonna save me. Let's pull up the Schedule C first. This is for your sole proprietors and your freelancers. Yes, or your LLCs that's a single disregarded entity. So here's the tax form. This is what they're asking you in reference to business. You're gonna put your business name. You're gonna put your EIN. How you put your social? You put your address, right? This code right here is your NAICS code. Okay, if you don't know what your NAICS code, go ahead and look it up. You're gonna put whether you're on a cash or accrual basis, right? Just answer those questions. But income is really usually really easy to determine. But let's go here to the expenses. Come down. So if you're an LLC single disregarded entity on one owner, you're filing it with your personal taxes. Um, this is for you. This is that Schedule C. This is what a lot of people try. I ain't gonna go there. PPP and all that stuff, right? Anyways, this is the Schedule C. Okay, at the very, very top. This is straight from the IRS website. Profit and loss from business. This is for your sole proprietors out there. Okay, it's filed with your taxes when you're filing self-employed. All right. So here we go. You have advertising expenses. You got your car and truck expenses, commission and fees, contract labor, depletion, depreciation, right? That's from your assets that may depreciate over time. Your employee benefits program, if you have one, insurance, if you offer it, interest, if that applies. If you are home based, so you have a mortgage or anything like that, if you're paying any legal or professional fees for sole proprietors, it's usually tax preparers, and sometimes y'all may have lawyers. Maybe y'all have LegalZoom or something like that. Office expenses, pension, and profit sharing plans, if that applies to you, rent or lease, if it's equipment, vehicles, machinery, or equipment, or other business property, repairs and maintenance, supplies, taxes and licenses, travel and meals, travel, deductible meals, utilities, wages, other expenses, and energy efficient commercial buildings, right? So this is what you're putting here. So if you loan your business, if you file the 1120, that would either go, either you're going to count it under your owner's equity in your retained earnings, somewhere of that nature, or whatnot, of that tax form, right? But these are the items you're deducting when it comes to business. This is where you're putting those numbers at on here. Let's see. Let me check. Because the loan, when you loan your business money, a loan is not income, right? So what you're spending it on, if you're spending it to purchase business, are you doing business with the funds? So you'll have expenses based on those funds. So you get to write off anything that you're doing business with when it comes down to that money, right? And these are all the items. So if you have a tax preparer, you try to keep yourself in order. Maybe you're having a hard time through the years trying to work it out. So this is a simple program that you can purchase. Is like $10.95 a month. Is a choice. You don't have to. I'm just gonna show it to you. It may help you out. For those of you having a hard time. A lot of times it's really just pricing it into your products or your services, so you can put the money away and you can actually pay the taxes. Like, all department stores do this all the time. Everybody who has a commercial business out there in the world, they charge you taxes, but you don't charge taxes. And so this is why you don't want to, or if you do charge taxes, you're not saving the money so that you can actually pay the tax. It's a choice. You got a ways to go to talk about. Oh Lord, I can't even get in the system. Hold on a second. Let me see if I can get in. I keep forgetting my password. Ah, let me see. Let me see. I appreciate you guys for tuning in, though. I thought I was gonna be talking to myself the whole time. All right, let me start sharing again. Resume. All right, so here's a simple system. Where's it at? It's called a cash flow manager. This is my kind. This is my home-based business. I've been in it since 2016. I absolutely love the cash flow manager. I don't think I can play this video. Well, I probably can, because it's not on YouTube or anything. Let's see. Uh-oh.
As a small business owner, you know how important it is to keep track of your finances. But with so many expenses to keep track of, it can be overwhelming. That's where the cash flow manager comes in. This powerful tool allows you to easily keep track of all your business expenses for tax reporting purposes. With the Cash Flow Manager, you can input all of your expenses and categorize them accordingly, making it easy to see where your money is going and how much you're spending on each category. But the real value of the Cash Flow Manager is in its ability to help you lower your tax liability. By tracking your business expenses, you can identify items that can be written off on your taxes, such as mileage, meals, communications, and more. Writing off these expenses can significantly lower your tax liability, which means more money in your pocket at the end of the day. But in order to take advantage of these tax benefits, you need to properly set up and use the Cash Flow Manager. That's why we've created a series of videos to guide you through the process. By following our step-by-step instructions, you can easily set up the Cash Flow Manager and start tracking your expenses in no time. Don't let your business finances overwhelm you. Take control with the Cash Flow Manager and start maximizing your tax benefits today. Watch the videos to learn how to set up and use the Cash Flow Manager.
All right, let's see. Let's
As
go.
a small business owner,
Let's go to it. Oh, I should have went back. Let me go back. So let's see. So when you go in, so I don't want to watch the video. Okay, let me go back because I don't want to watch the video. Hold on, y'all. Okay, I'm gonna do it from scratch. So, as you can see, I got a million tabs of it. So this is what it is, the Cash Flow Manager. I'm just gonna put in 2024 business. All right. So this is a high-speed little accounting system. You would download the app, and then you have the desktop version as well, right? So this is what it looks like. It's real easy to use. You put your income, you put your expenses in. It allows you to keep up with your receipts, right? And you can view them as you go along. Um, let's see. I'm sorry, somebody's texting me. Okay, so when you can you put in your income and expenses, and it was showing. I think I had started this and did a little demo. Let me see what I have in here. No, so it's real easy, right? You put in your expenses. If you have the app on your phone, you have the app on your phone, right? You put in this information. You could choose. You could choose. I've already created this one based off the business expenses that people normally do. So I have it matching the Schedule C. So when I actually type it in, right? Let's say advertising. Let's say I was putting in my econ fee for the website, right? Type that in. What business website? Where it's online, and then I just kind of made up a little note that I was in the Starbucks training somebody on it, right? Let's say if I have my receipt, if I ate or anything, I would click right here and I would upload my receipt, or I would take a picture. I would put my miles, how many miles I drove. Let's say I drove some miles. How many, or I'll put my speedometer, or I just actually type it in, right? And then you scroll down. I promise you, it takes less than 2 minutes to keep up with your stuff. Or if you have a teenager at home and you want to give them a job, or if you have a family member or friend and they always in your pocket, ask them to keep up with your stuff. And you can give them the cash flow manager login and let them upload those receipts for you. I don't give nobody no money unless they working. Forget that drama. You gonna do something. I'm gonna earn something back from you because I'm gonna write you off and give you a 1099 or whatnot. Because if my money is taxable, I'm taxing you. I'm not taxing you, but I'm gonna give you a 1099 so I can write it off on my taxes. But anyways, and this is how it kind of shows up. And it actually give you a cool little report, right? So if you was going for like a business loan or anything like that, you come in, you can print your little report off, right? And it'll have all of your information. And as time go by, it will add up. And if I had uploaded a receipt, it would show right here. Same thing with the mileage log. If you got audited and they wanted to see, boom. And the rule is that you want to if you have they have to audit your mileage, you have to have the date, where you went, and the to and from of the mileage and how many miles at a minimum, right? So it gives you all that here, who, what, when, how many miles you rode, and all that, and it'll add up over time. Okay. And so that's pretty cool on that. Profit and loss. If you wanted to see your business over time and how you were doing, it would show you your income and expenses over time. If this is your first time in business, you'd be able to identify the trends in your business. What are your low months? What are your high months? You would better know how to prepare for the new year. That's where corporate minutes come into play, where you would type up your minutes and say, okay, this is what I did for the year. You will pull up your cash flow manager, and financially you can do that financial projection on your own. And this is really growing you in your business. Okay. And you can categorize it. And as you go through it, you will see how it all works, right? Very simple, very, very simple. You don't have to worry about, putting, categorizing things in the wrong places with the big softwares like QuickBooks and Gusto and Paycheck and ADP Wave and all that stuff, right? This is very simple accounting application. You can write off on your taxes. Boom. If you didn't want to get into the whole MLM thing, you could purchase this cash flow manager, and there you go. You have an accounting system, and that will help you stay in order, right? For your taxes. Let me pull up one where you can see it kind of full out. Let me pull up this one. I'm kind of show it to you full out. Reoccurring. If you have expenses that happens over time, right? I'm gonna just back this one up just so you can kind of see how it works. I kind of use this one for classroom purposes. So let's look. Let's look at the profit and loss. Let's go back to 2016. Let's see. Boom. This is kind of like what I'm saying. When we first started doing this, I had used this for classroom purposes, right? So recognize your income, right? Like I was talking about, January through December, right? Then your expenses, got it categorized, ready for taxes. So gives you the year-end totals. You know how much you're making, how much you're bringing in, how much you're losing. You know how to do your business assessment. Looked at the annual. When you look at your annual report, right? And you can see your profit and loss. And over time, you can go through this information and get yourself right for business. Let's see. Ugh, it's spinning. One of them probably should have been closed out. Close that out. Let's go back. Let's look at the mileage log. Internet's cutting up. It's probably got a lot of data it's trying to pull. Let me narrow it down. But you can do reoccurring expenses, right? Let me show you. That's why I have those at the top. So if I did the same thing, let's say I go to the car wash, it cost me $48. Once I put it in one time and I know I'm going to do it every month, down here, there's a button Oh, you can't see it on this because okay, let me start it over. Hold on. Let me do it on a new expense. Enter an expense. So when you enter that expense in down here, you could put, is it weekly, is it bi-weekly, monthly, quarterly, or annually? And you could put when the next entry, and it will continue to roll over every month. And then it will show right here at the top of the screen. And all you have to do is confirm it. It will show up. You go down to the bottom. Everything's already there. You hit save. Confirm. Go down to the bottom. Hit save. Confirm, and you would keep doing that. So those things like your internet, your cell phone bills, um, anything you do, websites, and you do it this it's the same price, is a fixed price every month, then that's what you would do reoccurring for. And as you can see, scroll down and you can see it have and you all of it will be there. Very, very simple. So one of the reasons, as I stated earlier, that people don't like filing taxes is because of record keeping. But if they had a simple system to use, it would mean a whole lot to them. It would just make a world of a difference. World of a difference. And this will save your life. Go back to the dashboard. You can even create a budget. And many people operate that do not have a budget. They just make money and spend it. But if you're looking to expand and you really want to do this business correctly, you know, you want to get it put it on the right way. Oh, it came up. There it goes. So see how it comes up and it shows everything. So if you have to go to the bank and show your profit and loss, details of how you spend your money, your business, how many business miles, it does this for you. You don't have to try to go figure it out. A lot of my contractors I work with right now for housing repairs, my general contractors, I try to put them onto this. All right.
Let's see. Create a new cash flow manager.
Let's see.
In this video, you will learn how to download and create a new cash flow manager. Go to your phone's app store and search for MyEcon Cash Flow Manager. Find the Cash Flow Manager app and click Install. Go to the app on the phone and open the app. Log into the app with your email address and MyEcon password. Click the Cash Flow Manager button. If this is your first time setting up your Cash Flow Manager, it will be blank. Click the Create New Cash Flow Manager button to get started. Select the Cash Flow Manager type, business or home. The Cash Flow Manager allows you to track business or home expenses. We're going to select business. Name your Cash Flow Manager and click the Create button. There's no need to add a year to the name because your Cash Flow Manager is designed for you to manage your income and expenses for an unlimited number of years. Click Create. You have now created your new Cash Flow Manager, and you have been taken to the dashboard where you can enter or view your income and expenses, set your Cash Flow Manager preferences, or create a budget.
Bam. Too easy. Very simple. Very, very simple. And so this will help you out with your taxes. Number one. Okay, so I hope this helps you all. And I may come back and do after the tax deal and how to set it up. Now that you know you have an accounting system that you can actually use, we come back and we can talk about how to break down and price do your products and your services, because usually that's what happens. People don't really know how to price their products and services and how to add that in and actually create a way that they can have a healthy habit in business so that they can make sure that they're building capital for their business and that they're saving for their taxes and they're paying their taxes. Usually your demands, personal demands, are so high that when you're doing business, it kind of flows over into your business, and you usually don't make any money, you don't profit any money. But I don't think anybody's into business for taking a loss. I think we really want to profit. So I hope this helps someone out there. Peace, power, and profit. I appreciate you guys tuning in. And I'll try to get my PowerPoints together, up and running, everything flowing correctly, so I can give you some more inside news of the Urban Economic Empowerment Show. Peace.